We need to close you. Hello, everyone, and welcome to the Money Flow Stock Market Review and Forecast. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Gibraltar, we use time-tested methods and indicators that helps us to navigate these markets with confidence, clarity, and calmness. Now, for the weekly review and forecast, the closing bell for February 13th, 2026. Now, the major averages are mixed. Defensive rotation takes the wheel. So, with the subject for this week is rotation, rotation, rotation. Investors are increasingly ditching the high-flying tech names in favor of the boring but beautiful defensive plays. Now, we're seeing a massive migration into utilities, real estate, and energy. Now, here is how the major players crossed the finish line last week. S&P 500 closed at 6,836. The Dow Jones Industrial closed at 49,501. NASDAQ closed at 22,547. The Russell 2000 gained 1.18%. The VIX, aka the fear gauge, crossed that 20-point threshold, and we could see the beginning of some, I would say, shallow pullbacks or more volatile trading this coming week. Crude oil closed at $62.63. Gold closed at $5,054.07. Silver closed at $78.91, while Bitcoin closed at 68,950. Now, we will look at each of these different indices and commodities on the chart later on in the program. Now, our hot pick for this week is PG&E Corporation. The symbol is PCG. Now, as a utility sector surge a massive 7.27% this week, our top selection in that sector continues to shine. This is one that we own now and looking to add to our positions as the opportunity avail itself. In an environment where investors crave stability and yield, this utility powerhouse is looking like the safe harbor of choice. Now, while tech is sweating, PCG is busy keeping the lights on and the dividends flowing. And we will look at that on a chart here later in the program. Now, for the forecast, expect continued choppiness in the major averages, especially since now the VIX has crossed that threshold of 20. Ongoing pressure in the mega cap tech sector and relative outperformance in utilities, energy, and real estate. Now, this market isn't breaking down as of yet. It is rebalancing leadership, forgive me. Now, for now, defense wins, and that's why we are uh, invested into not only the PCG, but also the XLU, which is the defensive or the utilities ETF. I'm going to take a look at that as well. So for now, stay nimble, stay selective, and let the rotation work for you. Now, this uh, forecast is prepared for my client distribution. It is not investment advice for education, but it's all for educational and informational purposes only. Now let's get into these charts. Now, as you can see on my 4 grid that we uh, display on every broadcast, we have the S&P 500, the Dow Jones Industrial Average, the NASDAQ, and also the Russell 2000. Now, we use this as our long-term trend direction. So, as we reiterate on the program here, long-term trends dominate, short-term trends fluctuate. So we are still in a long-term dominant configuration or environment. So we're going to maximize these charts, and we're going to look at them very closely to determine what our long-term trend is. Remember, whenever we have a green background, this is our proprietary software that we use to give us a very confident feeling and outlook where the what the dominant trend of the market is. So with the four indices that we track, when we look at the S&P 500, you still see that we have a green background. Green background denotes bullishness. And also to confirm that, we see that this is a weekly chart, so each of these price bars represent a week in the market. So if we have our moving averages, which we use as our markers, we see that our 40-week moving average or 40-period moving average is continuing to rise, right? And our price bars are above it. Even though we saw a pullback last week, we have a 10-week moving average that is rising and a 40-week moving average that is rising. Now we have our confirming indicator here, the MACD, that is turned negative and showing that we may have reached the top, and we should see, a little bit of a shallow pullback to this gray moving average. Okay. And if this background does not turn red like it did here back in last year, March 2025, we are in good shape to remain positive for the long-term uptrend of the market. Again, long-term trends dominate, short-term trends fluctuate. So we're going to move on now with that explanation. We're going to move on to the Dow Jones Industrial Average, and we see the same type pattern, green background, prices above what? Rising moving averages, and we are still continuing to grind high at this point. We're going to look at the NASDAQ, and as you can see, we talked about it earlier in the program, that they're starting to pull back a little. So what has happened with the NASDAQ, as you can see, the prices were above the moving average. Right now we have, as of last week, the price is below our yellow line moving average, and that gives us a warning sign. Okay, and we also have our MACD, which is our confirming indicator. It has turned negative. So that is why we can see that rotation out of tech. The NASDAQ is tech heavy index, and our chart, our system helps us to see that. So we are not invested heavily into the tech sector as of now. That's why that rotation is moving into the utilities, real estate, and energy. And we're going to look at those on a chart as well. This is our long-term view. We're not in a downtrend as of yet, but we can see the beginnings of it. And that is the beauty of this system that helps us to uh, uh, navigate with confidence, clarity, and calmness. So we just simply rotated out of our tech stocks, and we're invested, as we showed on the introduction of the program, moving into the utility sector. Now, if I will put the utility sector here on our long-term chart, we're going to use the symbol XLU for utilities. That is the ETF, the SPDR, the sector SPDR ETF for utilities. We're going to use XLU, And as you can see, wow, how revealing is this chart, is this system. We had that huge surge in utilities. Utilities has been in the green background here, and it's been uh, positive ever since April of 24, so almost 2 years. It has been chugging along, chugging along, chugging along, chugging along. It hit a high here back in October of 2025 to 46.89, pulled back, hit that rising moving average. Normally, on the long term, when the price chart hits a rising moving average, it bounces off and begins another surge. But look at this massive camel. We call that a elephant. That is where massive institutional smart money is flowing. And all we do here at the Money Flow newsletter is we follow the smart money. When you learn to follow the smart money, 80% of your investment uh, objectives are met. So we move on now to, so we saw this and we moved in and we picked up, well, we'll look at it on the other chart here. Let's move on to the Russell 2000. Russell 2000, same green background. Prices are above rising moving averages. And even though we had that major pullback, not a major, a shallow pullback on Friday the 13th, we're still pressing forward. So what is our takeaway from this? With the green backgrounds on all four major indices, we are currently still in a long-term bull market. Okay, so we stay invested, we stay nimble, but now we're rotating into defense. See, we don't do this all the time. It's just from time to time. Sometimes it takes months, sometimes it takes a year or so. We have to rebalance, and that is what's happening with the market right now. So, with that said, we're going to go ahead and we're going to move and look at the commodities. We're looking at Bitcoin. And here's a long-term chart of Bitcoin. Bitcoin is in a long-term downtrend. It has gone from 127 down to 68. So what do we do with Bitcoin now? We just avoid it right now. But our chart tells us where we are in the game. Well, okay, we're gonna look at Bitcoin, then we're gonna look at the VIX, the fear gauge. Now, as you can see on our long-term chart, it's showing a bottom here and it's starting to move up. Right now, it's showing overnight that it's moved up to 22.2, where it closed on Friday at around 20 or so. So look for, again, as we forecasted in the introduction, look for more choppiness, more volatility in the market because of the VIX moving above that threshold of 20. Now we're going to look at oil. And the oil again is showing promise to break out and starting to move up, even though it's starting to consolidate a little bit around that 63.78 mark. And it's up in the aftermarket above 80 cents. And again, we're just looking at oil as it consolidates and continues to move up. We got oil. Now we're going to look at gold. Gold has just been on a tear. Pull back a little bit here for the past 3 weeks. We hit a high of 26.8, and it's not far from that high right now. We're going to look at silver real quick. We see it's pulling back, even though it's still above our rising moving average. And we're going to look at our PCG. Boom. We got a nice push and we are in the green. So that's it for now. So every day and every way we get better and better. Every day and every way we grow more prosperous, successful, and victorious.